Okay, so good day, everyone, and thanks for joining us for today's session and for your patience. My name is Alexandra, and I'm the Money Counselor with Momoni Financial Literacy Resource Center. So Momoni Financial Literacy Resource Center and the Mohawk College Alumni Association, in partnership with the Canadian Foundation of Economic Education and the National Bank of Canada, have created a series of Mohawk College student-facilitated financial literacy webinars titled Wealthy Wednesdays. Welcome to the first one of the series, Understanding Personal Income Taxes. This session is delivered from my home in Hamilton, Ontario, on land very close to Mohawk College. So I'd like to take this opportunity to acknowledge that my home and the college are situated on the traditional and unceded territory of the Haudenosaunee and Anishinaabe nations, with the lands protected by the Dish with One Spoon agreement, and is currently home to many Indigenous people from across Turtle Island. Momoni is here to help. So at Momoni, we are committed to helping students improve their money skills. To accomplish this goal, we host events, workshops for groups, and we also have individual appointments where you can meet with myself, the money counselor, and talk about your specific financial situation. We have also developed some financial resources to support you in your path to develop financial literacy skills. We have many ways that you can connect with Momoni. You can follow us on social media, on Instagram and Facebook. You can also access our Money Matters module. This is a free course on my Canvas. In this module, you can learn about budgeting, starting a business, big purchases like cars and houses, how to manage debt, and much more. So later, I'm gonna let you the link in the chat so you can have access to our website. Then you can, through that link, you can access the module and you can book an appointment if you want. Now let's talk about the benefits of attending our workshops. The Cocurricular Record, CCR, is a tool for students to track this experience or any program or event not formally related to a program of study. So the CCR can be used on and off campus when applying for jobs, awards, scholarships, and to build resumes. Just like an academic transcript, the Cocurricular Record is verified and approved by Mohawk College staff. The CCR is then stamped and signed by the Vice President, students, international and alumni, to acknowledge students' non-academic contributions to their campus and community. The CCR can be downloaded and attached to an application to draw attention to demonstrated skills and experiences. So you need to register your attendance to mohawkcollege.ca forms and visual event attendance form. I will also send you the link through the chat. You need to enter the code Momoni for me. I will let all this information in the chat for you guys. The Canadian Foundation of Economic Education has been very generous in offering a chance for participating students to be entered into a draw to win a 100 gift card for Tim Hortons. And also, if you attend 4 out of 5 of our Wealthy Wednesday sessions, you will be eligible for a financial advocacy badge, and also your name will be entered into a draw to win $250 cash. Now I'm going to pass it to Lindsay from Alumni, who is going to share with you some important information.
Thank you. So my name is Lindsay Diamond, and I'm from the Alumni Relations office. My role is Career Transition and Development Coordinator. So what that means is I make connections with students on campus, and then I help with the transition once you graduate. So the Alumni Association is your link to Mohawk College after you graduate. One of the ways that you can stay connected with alumni is through the many events that we host, such as social events like trivia nights or tea tasting, career development workshops and webinars, personal development webinars, and many, many more events that we host. As a student or graduate of the college, you're encouraged to attend these events, as well as follow us on social media. So you can start following us today. We post all of our stuff up on social media. So I look forward to learning alongside everyone this afternoon. So I would like to hand it over to Miriam, our student facilitator and CFE staff for understanding personal income tax. Enjoy, everyone.
Thank you, Lindsay. Hi, all. So my name is Maria, and today I'll be the student financial facilitator for Momoni's helping manage your money on campus. So we do have a pre-survey link in the chat, and if you would like to complete it, and you'll be entered into a draw to win one of two $100 Tim Horton gift cards, and any of your information, email address won't be used for any personal it'll be confidential. So welcome to our workshop. This is this is a program of the Canadian Foundation for Economic Education in partnership with the National Bank of Canada. To ensure your questions are answered today, we'll have a Q&A at the end of the presentation, approximately an hour. Please hold all your questions until the end of the presentation when I look forward to answering them. There's also a Q&A box where you're able to put in any of the questions that come along during the presentation, and we'll be sure to answer it at the end of the presentation. So to begin, first, a little about this program. CFE and the National Bank have partnered to offer post-secondary students across the country to access financial literacy workshops. And it's a pleasure that Mohawk College is a part of this. The program helping manage your money on campus is designed to help students like us to understand and have a better comprehensive financial education through these modules. This is important because we live in a complex financial world where we are always dealing with money. And because more than ever, the majority of us deal with financial obligations and choices on a daily basis. And that's exactly why we have partnered with the CFE and the National Bank of Canada to provide universities and colleges across the country these modules and workshops so that students like us can benefit from. In the first half of 2020, we asked students what their priorities were and what they would like to learn more about. And over 1,500 surveys later, here's what we found out. So this module will help determine the 3 priorities that students indicated they had. So we hear your concerns and we understand your challenges. So that is why we put today's presentation together for you guys. So after coming out of this workshop, today's presentation will help you better understand how Canada's personal income tax system works, and we will give you more control of your money, which will help to lower your financial stress levels and increase your financial well-being. So as you heard, taxes are an important part of our everyday lives. So we will get to learn more about them. So today we are going to cover Canada's tax system. So the more money you make, both in terms of dollars of income tax, but also the percentage of your income. Second, we will look at tax returns for students. So we will review deductions and credits available. And lastly, we will review tax strategies. So something like ways to reduce taxes payable and how we can keep more money in our pockets. And as students, this is something that we can all benefit from. And once again, coming out of this workshop, we outlined 3 important learning outcomes for everyone. So first, the one of the most important learning outcomes is to have a better understanding of how to minimize taxes. So as a student, being aware of tax deductions and credits is important and useful. Second, we will look at and be aware and how to take advantage of tax efficient government savings programs. And lastly, we will look at how to know how different sources of investment income are taxed quite differently. So we will get more into this along the presentation. So Canada's tax system is progressive. So what that means is the more money you make, the more you pay. So most countries follow a tax system like this as it helps lower income people keep more of their income. And it tries to ensure higher income pay for more of the services the government offers. So for example, if you're making lower than $10,000, your contribution would be low, but someone making a significant higher amount of money, they would be required to pay more in taxes, which will help the economy and the government. So let's look at Canada's tax system. So firstly, you pay federal taxes and provincial on the income you earn. And there's a distinction between the federal and provincial. So federal taxes are 1 to 2 times higher than provincial tax rates. And this is a rough rule of thumb. You're required to report your total income to the Canada Revenue Agency, and short form CRA, when you file your tax return. The tax you pay is based on your taxable income. So the rate and percentage increases as your taxable income increases and exceeds certain amounts. They're also called tax brackets. Overall, you can reduce your taxable income and the taxes you pay by taking advantage of available tax deductions and credits, which we'll also be covering later on. So taxes, but why? So everyone knows about taxes, or we've heard of it, whether it's from word of mouth or through media, news. Usually you hear people complaining about taxes, and it is important to know and understand why we pay taxes. So in Canada, the personal income tax system started in 1917 as a temporary measure to help pay for the costs of World War I. Today, income taxes are the #1 source of revenue for the government. So, for example, in Canada, we provide free healthcare, and our tax contribution is dedicated towards citizens and people of this country to have free healthcare. And very likely then this temporary measure is here to stay since World War I. And as we look at it, taxes are payments that we make to government. So there's different levels of government. So this includes federal, provincial, and municipal. And taxes, also to touch on public goods and services. So public goods and services are provided by government, and that is goods and services that everyone should have access to regardless of their ability to pay. So touch on that previously mentioned, healthcare would be one of them, as it is a public service that all of us have access to. Public goods and services, other examples are public schools, hospitals, sidewalks, roadways, sewer systems, defense, judicial systems, and courts, so on. So next, we can look at this chart that is presented and displayed on this slide. So where your taxes go. So this is roughly a breakdown of where your taxes go as of a few years ago. So to look at the chart, some examples are, it is indicated that roughly 15% go to the elderly old age security and guaranteed income supplement, etc. Roughly 12% of the taxes goes to provide us all with healthcare, and roughly 8% goes to servicing the outstanding debt. And as you can see on the chart, there's many more examples. For example, the children's benefits. So if you have a child or children at home, there's a benefit available where the government will pay you a portion depending on how much you make. So these are some examples of where our taxes go. So Canada, as mentioned previously, has a progressive tax system. So this is where your taxes based on the taxable amount of an individual's income. So this depends on the salary and how much you make per year. This is a very equitable way of helping lower income Canadians receive services by transferring more taxes from higher income residents. So to look at some statistics, federal tax brackets vary between 15% and 33% on the first $50,127 of taxable income, and 33% on taxable income over $221,708. And as you can see, provincial taxes are at a different percentage than federal. And our system results in individuals having a marginal tax rate. So what that is the percentage of your taxable income you pay increases at certain intervals. So an example would be for each dollar of taxable income over $49,020, you will pay approximately 20.5% in federal income taxes versus the 15% for the first $49,020. This is an important concept to be aware of as your income increases during your working career. So each dollar the individual earns places him into a new tax bracket, resulting in a higher tax rate once the dollar amount hits a new threshold. To touch on our statistics a bit more, Ontario has the highest marginal tax rate of 53.53%. So that means every dollar you earn, whether that is employment or self-employment income, over $220,000, you pay more than half in income taxes. And to compare this to other provinces, for example, Quebec has the highest marginal tax rate. The highest tax rate is 53.31%, and BC's highest marginal tax rate is 53.50%. So roughly all the provinces are similar in their marginal tax rates. So let's look at some specific numbers. You might want to take a screenshot of this, or you can look at it up at taxtips.ca if you would like to refer this to any time later on that you would like to use this or find it helpful. So Canada's federal, provincial, and territorial governments require that the residents pay income tax when their income is above a minimum amount. So each government sets its own minimum amount each year, and it can vary every year. So this means that people who earn income above the minimum pay two income taxes. So one would be for the federal government, and one is to the province or territory that they live in. In Canada, the tax system is progressive or graduated. So what that means is the more money you make, the more income taxes you pay. So the amount of your income that you pay in taxes is expressed as a percentage, and it goes up in steps, or also as brackets, as previously mentioned. So you'll pay taxes on your income at both the federal level and the provincial or territorial level. So looking at this chart, we can say, for example, in the year of 2022, you earned $60,000 a year. So you would be paying tax in brackets. So the first $50,197 would be taxed at 15%, which would be $7,530. And the remaining $9,803 would be taxed at 20.5%, which would be $2,010. So roughly you would pay a total of $9,440 in taxes when your income in 2022 was $60,000. And on that 60,000 taxable income, the average federal rate is 15.9%. So that is your total income divided by the total tax you pay. However, the marginal federal tax rate is 20.5%. So this applies until you make more than $100,392 when your marginal rate rises 26%. So this chart just gives roughly a demonstration of how much in percentage your taxes could be in federal and both provincial. And this could be useful later on throughout your career if you're looking at how much you would have to pay in taxes, both the provincial and federal level. So looking at anytime taxes are withheld, so that could mean on a bi-weekly paycheck. That is an estimate, and it'll be trued up when you file your taxes. So it is important to note that the government withholds taxes on your bi-weekly paycheck. So many students who probably work part-time or any other career, you will get a paycheck bi-weekly, and on that paycheck, the taxes will be deducted, and what is left is what you get to keep. And it is a roughly true amount when you file your taxes. So that amount could change when you file your taxes. So why do you think the government does this? So the government recognizes that if they waited until the following year to collect all the taxes you owed from the prior year income, there's a good chance you wouldn't have that money, or you would not have that money saved up, or be in debt and unable to pay for it. So that is why the government is practicing the pay yourself first, which is a very important discipline to ensure that you're saving money for the future and on an ongoing basis. So why taxable income matters? So note the term taxable income. That is because you may not want to be taxed on all your income, so certain deductions may be able to be claimed to arrive at taxable income. So for example, if you make a contribution to your registered retirement savings plan, and that is a specific plan to save up for retirement, that amount may be deducted from income, reducing the amount of taxes you have to pay. So for example, if you earn an income of $60,000 and you put $5,000 into your RRSP, which is the Registered Retirement Savings Plan, then you will be taxed on the adjusted amount of $55,000. So when you're able to deduct money from your income, your total income and hence your marginal tax bracket is very important. So for the highest earners, an RRSP contribution is more valuable in terms of dollars and percent of contribution you receive back from the government. So some other examples of deductions include moving expenses. So if you had to move more than 40 kilometers to take a job or to achieve or have childcare for your children, or expenses under children who are 16 years old. So those are some deductions that could be deducted from your taxable income. And there's also something called tax credits. So what this is there's deductions from income that reduce your taxable income, whereas tax credits are amounts that reduce the tax you have to pay on your taxable income. So the more tax credits that apply to you, the more you can reduce your income tax. So everyone who files a tax return gets the basic personal amount, which is also called a BPA, as a non-refundable tax credit. So it reduces your taxes payable. And for example, if you earn less than $13,808 in the year of 2021, you will pay $0 in federal income taxes. But if you don't owe any taxes, it won't generate a tax refund, thus the non-refundable label. As well, to touch on certain medical expenses, so over a certain dollar amount each year, or charitable donations can also result in tax credits that can reduce taxes that you have to pay. So for example, if you donate to a charity, it is best to save the receipt, and while you're filing your taxes, you can put in the amount, and this can reduce the owable taxes that you owe. So we are going to get into some relevant deductions and credits for students in our next section. So here's a short video that we'll watch, and I would like to share the screen in a moment.
Filing taxes is really nobody's idea of a good time, but one small joy you can get from it is in watching your tax bill go down as you add in deductions and credits. But what exactly is the difference between a tax deduction and a tax credit? Aren't they kind of just interchangeable? While both can be good for your final tax return, they are very different. First up, let's look at tax credits. A tax credit reduces your overall tax liability. So if you have a $1,000 tax credit, that means you no longer owe $1,000 on your taxes. A tax deduction reduces how much of your income gets taxed. Let's say you have a $1,000 tax deduction. It is applied to your top income tax bracket. So if you made $55,000 last year, your top tax bracket is 22%. That deduction means that $1,000 of your income won't be taxed. So you save that 22%, which would equal $220. This all makes tax credits sound pretty great, right? Most of the time, yes, but there are some catches. Many tax credits aren't refundable. What that means is, let's take this $1,000 tax credit again. But let's say you only owe the IRS $600. You don't get that extra $400. Not all tax credits are non-refundable.
So as you can see, it was a short video that explains the differences between deductions and credits. It is a US video, but the concepts are the same here in Canada. And it is important to note that the marginal tax rates in the US are lower than Canada. So do you know how much you're paying? In 2019, the Tax Freedom Day fell on June 14. So the Tax Freedom Day measures the total yearly tax burden imposed on Canadian families by all levels of government. So if you had to pay all your taxes up front, you'd give government every dollar you earned before June 14. In 2019, the average Canadian family with 2 or more people will pay $52,675 in total taxes, or 44.7% of its annual income. So we can take a look at another short video that will explain more about it.
Happy Tax Freedom Day, Canada. And if you're wondering what Tax Freedom Day is, Well, Tax Freedom Day represents the total yearly tax burden paid by the average Canadian family. We don't just pay personal income tax. We pay CPP, employment insurance, sales taxes like GST and HST, property tax, fuel tax, carbon tax, and more. If you add them up, the average Canadian family will pay 44.7% of its income this year in taxes. And if you paid all your taxes up front, you'd give government every dollar you earn from January 1st up to, well, today. And that's why we're calling June 14th Tax Freedom Day. It's the day of the year when you start working for yourself. So happy Tax Freedom Day, Canada. To learn more and to calculate your personal tax freedom day, visit FraserInstitute.org.
So as you can see by that video, in 2020, May 19, 2020 was the Tax Freedom Day, which represents the total yearly tax burden imposed on Canadian families. So if you had to pay all your taxes up front, you'd give the government every dollar you earned before May 19. And the average family would pay 37.7% of its income in taxes. Ordinarily, Tax Freedom Day comes much later in the year, but in 2019, it fell on June 14th. But an earlier Tax Freedom Day in 2020 was nothing to celebrate since it's not the result of governments reducing taxes. Instead, the Canadian families have been significantly impacted by the economic shutdowns with response to COVID-19. When the economy slows and income declines, Canadians are bumped into lower income tax brackets and pay a smaller percentage of income in taxes. So Canadians have also reduced their spending, which means less sales tax are being paid. Canadians should be worried about the tax implications of about $400 billion in defects incurred in 2020 and in 2021 to combat COVID-19. So as you can see, some of the economic challenges that our society and the current world faces can impact how much we pay in taxes and overall affects our economy. So to look at the next section, these are some of the key takeaways we should have learned. So yes, you pay taxes, but they pay for many services you receive. So for example, children's benefits, healthcare are some of the examples that we pay. We have a progressive tax system, which means the more you make, the more you pay. And lastly, taxable income matters. So make sure you learn about tax deductions and some that may be available to help reduce taxable income. As previously mentioned, donating to charities is an example of to reduce your taxable income, and the tax credits that may be able to be claimed to reduce the amount of tax that you need to pay. So let's move on to specific tax issues that students need to keep in mind. So in this section, here's what we are going to cover. First, we're going to cover 3 ways to reduce your taxes. Second, we're going to take a look at top student tax credits and deductions. So this will be helpful for all students. And lastly, we are going to take a look at having a tax plan and preparing your taxes. So 3 ways to reduce your taxes that are withheld from your paycheck. So the first example that we can list is to give your employer accurate information. So for example, when you start a new job, you must complete the TD1 personal tax credits return form. Your employer uses this form to calculate how much tax to deduct from your paycheck based on the non-refundable tax credits that you're entitled to. Some examples of non-refundable tax credits include spousal amount, caregiver amount, tuition, and education amounts. So perhaps if you make $10,000 or less, then you do not have to pay taxes on that income. Second, and as well to touch on that, it is important to tell your employer if your personal circumstances change, such as financial circumstances. So to come that this would mean that you would have to complete a new TD1 form. So for example, a personal circumstance could be you got married or you enroll at a university or college. And you should ask the CRA to apply other tax deductions. So it would be best to complete and file the form T1213, request to reduce tax deductions at source. So if you know you're going to have a significant deduction in a given year, this would be the form you would have to apply, fill out. So examples would be RRSP contributions, which is the Retired Registered Savings Plan, rental losses, childcare expenses. So give the approval letter that you receive from the CRA to your employer, and this will reduce the tax taken away from your pay. So these are the taxes. You must file your taxes annually to receive any of these benefits. So the first example is tuition amount. You can claim tax credits for tuition fees for each post-secondary course that costs more than $100. You would need to ask your school for a form of T2202A. And for those attending Mohawk College, this is available for all Mohawk College students on My Mohawk. And this will be a personalized form depending on the tuition you paid. As well, it is important to look at examination fees. So if you're required to take a professional exam to obtain a recognized professional designation or a license or certification to practice a profession or trade in Canada. So if you would like to learn more about eligible tuition fees, you can go to the CRA website, personal income tax, claiming deductions, credit and expenses. And on your income tax, while you're filing this would be on the line 32,300. So personally, if you can't use all your tax credits for tuition, possibly due to having insufficient income in the year, you can transfer your credits. So you can transfer up to $5,000 to a supporting parent, grandparent, or spouse. Before you can transfer credits, you must apply them to your own tax return and reduce the tax that you owe to zero. And looking at interest on student loans, you can claim interest on student loans made to the Canada government under the Canada Student Loans Act. So the Canada Student Financial Assistance Act or similar provincial or territorial government laws. So you can't claim interest paid on any other kind of loan, even if it is to finance your education. So for example, a line of credit to pay for your tuition. Thirdly, we're gonna look at moving expenses. So if you're a full-time student and you move to be at least 40 kilometers closer to school, you can also claim a tax deduction for your moving expenses. You can get this tax deduction by applying it against the tax you're required to pay on scholarships and bursaries, fellowships, prizes, and research grants. So if you qualify for the deduction, you should use the form T1M and enter the amount on line 2119 on your return. So you will be eligible for expenses that may include transportation, storage costs, temporary living expenses, and incidental costs such as changing your address on legal documents, replacing your driving license. And these are some examples. There's also a GST, HST credit. So this is any non-taxable credit paid quarterly up to $451. If you're single, you receive $0 in GST credit if your net income is over $47,527. So likely other provincial credits are available too. So we're gonna look at tax planning. So there's 5 steps in tax planning. First, we're going to look at starting your tax planning early. So at the beginning of the tax year, you should plan how you're going to arrange your financial affairs to lower your tax bill. So for example, you can check out tax tips from the Canadian Revenue Agency, CRA. Second, we're going to look at to keep good records and receipts throughout the year. So for example, good example would be if you donate to a charity, it would be wise to keep that receipt so you can put this on your file for filing income taxes. And it's important to organize and file your receipts as they come in. This will make it easier at tax time. So some of the information can include supporting documents, bills, credit card statements, medical expenses, receipts, insurance for glasses, wisdom teeth, etc. And thirdly, we're going to make sure that you receive all your tax information slips. So this includes receipts for the RRSP contributions and charitable donations. It also includes a T4 slip. So if you're working as an employee, your employer would issue a T4 slip. A T4A slip is if you have received pension income, lump sum payments, self-employed commissions, or annuity income. The T3 form if you have earned income such as mutual funds, and a T5 form if you have received investment income. So this would include interest dividends. We are also going to look at and decide if you need tax preparation help. So if your tax return is fairly simple, for example, if you have employment income and an RRSP deduction, you can prepare it yourself using one of the many software programs available. The ones on this list are compatible with the CRA's NetFile program. Personally, there's many softwares that you can use, and I personally use TurboTax. So it is a great idea to look into, as you'll be saving money from filing your taxes as opposed to going to a financial service. And lastly, the last step in tax planning is to prepare summaries and organize your receipts. So before going to a tax professional, if you do, you should summarize your different sources of income and deductions and tax credits. And this will also save you money in tax preparation fees, as tax professionals can charge you for the amount of time that you're seeking advice or them filing your tax returns. You may want to provide a cover letter that could provide quick reference information for accountants, such as your name, your social insurance number, number of employers in the year and who they are, your student status, your marital status, whether they have received government funding, if you have received grants or bursaries. So you would still have to provide all this information and documentation, but the exercise is a great way to make sure that you don't miss anything important from the year. So who must file taxes? So residents of Canada with an earned income. So it allows you to be eligible for items such as the GST and HST refund. So this is on anything that you purchase, and to generate an RRSP contribution room. So for those of you who are international students, you will need to file Canadian taxes if you have worked in Canada and you have earned income, and they must establish significant residential ties to Canada. And the deadline to file taxes is April 30th for most taxpayers. And it is best to be prepared before this date, as there can be a deadline and a fee or some type of letter that you will receive from the CRA if you don't file it on time. And the June 15th deadline is for those who are self-employed, so those who are working for themselves. However, all taxes due are owed by April 30th deadline. And to touch on previously what I said is that penalties can begin after that date. So who can prepare your taxes? So there's many people who can prepare and file their own tax returns. Looking at the previous slides, there was a tip mentioned that if you have a simple tax return to claim, such as you're only working and you're looking to file for RSP deductions, you can use many softwares that are available to file your own tax return. If you're uncertain about what you can and cannot claim, there's some complicating factors and you might want to seek a professional in that circumstance. Perhaps your parents or friends can provide some help or enlist their help of their tax preparer. There are professional providers who can help too, but they generally charge a fee. So for those of you at Mohawk College, adding in the amount you paid for tuition and any amount you received in scholarships is important to file in your taxes. So the amount you paid for tuition in school can be assessed by retrieving the form that is available on the My Mohawk website. So as well, Mohawk College does offer additional support for those who would like to assistance, and they do have an email that you can contact for any filing your taxes inquiries. And as you can see, your school or region may have a volunteer tax center where you can get some assistance. Previously mentioned, Mohawk College does offer support by contacting them or on their phone number. As well, there's many free places, volunteer centers where you can get your taxes filed. So an example would be going to your local church, and you can keep an eye out in the community for any postings about your church offering that service. So if you're self-employed and earn investment income, you may want to hire a tax professional to recommend strategies for minimizing and deferring your taxes. Their fees may pay for themselves in terms of tax savings. So it is a good idea if you're self-employed to speak with a chartered professional accountant who specializes in income tax. If you're a service, you should check them out to make sure that they are legitimate and the reviews of their service are good and that the cost is not expensive. Also, as with any contract you sign, you need to review the details before you sign. So make sure you understand your responsibility and what the tax preparer is responsible for, doing the best with the information you provide them. If you miss, for example, a source of income slip, etc., that can be your responsibility. So it is important to be aware of such things. So the key takeaways we have learned from this section would be firstly, learn about deductions and credits and try to maximize the benefits that you should receive. Second, you should not leave your taxes until the last minute. So it is good to have a record every month of receipts, medical expenses, moving expenses. And lastly, more than likely, you can complete your own taxes. So this investment of time and learning can give you a great return on the investment of your time. So the important thing about filing your taxes is to make sure that you file your tax return and pay the required tax on time. So the typical deadline is April 30th to file your taxes. To note, here I did give an extension in 2020 due to COVID-19. So tax evasion is illegal and generally involves not filing your tax returns, and there can be severe consequences. Tax evasion, which is to not file your taxes, is against the law. In contrast, tax minimization refers to legal steps you can take permitted within the tax laws to reduce your tax burden. So one way that you can reduce your tax burden is by making sure that you claim all the tax deductions that you're entitled to. You can also reduce your tax burden by contributing to the RRSP, which is a registered retirement savings plan, or setting up a TFSA, which is a tax-free savings account. So these are referred to tax minimization strategies, and they're perfectly legal and is something as we as students can take advantage of. So here are the tax strategies we'll be covering throughout this section. So various sources of income are taxed differently on investments, and these differences can lead to materially different tax rates. And then we will talk about the tax benefits of a retired registered savings plan and a tax-free savings account. So if you put your investments into a non-registered or unsheltered account, you pay income taxes on the money you earn in the tax year in which the income was realized. So the amount of taxes you pay depends on the type of income you have earned. So first we can look at interest income. So you can earn interest from many sources. So examples could be from a bank account, a guaranteed investment certificate, a bond you hold, a mutual hold that holds interest paying investments, and non-Canadian dividends. Second, we can look at dividend income. So that is if you own common or preferred shares in a taxable Canadian corporation or owns units of a mutual fund and that invests in such common and preferred shares, you will probably have a dividend income. So dividends are cash payments to shareholders of a corporation made from corporation profits, which rates are a more favorable tax treatment than interest income, especially if your annual income is under $100,000 per year. So the taxes you owe on dividends is a complicated process, including gross ups and tax credits. But the bottom line is that for say someone in Ontario or British Columbia with taxable income below $50,000, the tax rate on eligible Canadian dividends is 0%. Greater than 0%. So for example, Quebec and Alberta, the tax rate is 5%, all or else equal. So the end effect is that the amount of taxes you pay on dividends is relatively low compared to interest, making dividend income more attractive. However, dividends from foreign companies are not eligible for this treatment. Thirdly, we can look at capital gains and losses. So this is only when you sell a stock. So for example, if you bought 100 shares of a corporation for $10 a share, it probably would have been a brilliant move, and perhaps say that the corporation is now worth $100 a share, and you decide to take some profits and sell 50 shares, which would be half your investment. Your REAP would be $5,000 and realizing a profit of $4,500. So that $4,500 is a capital gain. So that's what makes capital gain attractive from a tax point of view. So we're going to launch a Zoom poll and answers are confidential, and you can fill that out and we'll give a minute and we'll discuss the results.
Just give people another 20 seconds or so, Miriam.
Yeah.
Can you see the results?
Yes, so based on the results, the question did ask, do you have a TFSA? So for those of you who are not aware, that stands for a tax-free savings account. So 46% of you have answered yes, and 54% of you have answered no. So for those of you who've answered no, this section would probably benefit you and give you some more insights about our tax-free savings account. So a tax-free savings account may allow you to earn income without paying tax. So for example, you can deposit money into a tax-free savings account up to a certain annual limit to save for future. So any income or gains you earn on the investments held inside a TFSA are not taxable. So making a tax-free savings account contribution. So unlike the RRSP, which is the Registered Retired Savings Plan, you can't deduct your contribution from the income, but you can report it on your tax return. So this is an overview insight on how tax-free savings account contributions work. So you don't have to have earned income to contribute to a tax-free savings account. As well, you don't have to set up a tax-free savings account or file a tax return to earn contribution room. There are certain requirements that you must meet in order to be eligible to have a tax-free savings account, which includes that you have to be 18 or older and have a valid Canadian social insurance number. For the year of 2022, the tax-free savings account contribution limit is $6,000. So if you don't contribute the full amount that you're allowed to in any 1 year, you can carry forward any unused contribution room based on the contribution limits for each year. So in the year of 2022, you could contribute up to $81,500. So if you are 18 and a Canadian resident with a valid social insurance number when they were first introduced. Also, if you do take out money out of tax-free savings account for any purpose, you can replace that amount the following calendar year, but not before, or there will be fines. Because an RRSP gives you a tax deduction based on your marginal tax bracket, it is typically more valuable to contribute to a tax-free savings account first if your taxable income is less than $50,000 and your marginal tax rate will be thus low in the 20%. So any individual who's 18 years of age and older with a valid social insurance number can open up a tax-free savings account. To mention that is a very great opportunity for students who are looking to invest for their future career and anything that they have planned. So you can defer tax with a registered retirement savings plan. So if you deposit money into an RRSP, a registered retirement savings plan, to save for your future, you get a tax deduction. This can also help you to reduce your taxes in the year the money is deposited into the registered retirement savings plan, but be aware that the money is taxed when it is taken out of the registered retirement savings plan later. So how to defer tax with a registered retirement savings plan? So the first requirement is that you must have earned income. Second, you must file an income tax return. You can also claim a tax deduction for the amount you contribute each year, and the contribution room builds over time if you do not use it. So this chart highlights a few of the important distinctions between investment accounts. While they're both storage containers, to use a popular illustration, meaning you can put investments in them. For example, a tax-free savings account can be contributed to without any income, whereas you can only place a percentage of earned income into a registered retirement savings plan, and the annual limit is 18%. As students, a tax-free savings account is beneficial, as mentioned, for saving up for the future. So we're going to look at key takeaways. So Canadian dividends may be taxed at a negative rate. Capital gains are taxed at 50% of income rate, and interest income tax, typically marginal income. It is roughly about the same at the typical marginal income tax rate. And a tax-free savings account is likely the better option than a registered retirement savings plan if your taxable income is more than $50,000. And you can see that there's tax efficient government programs that we will look at. So overall, let's review what we have learned. So first, we have learned about the Canada's tax system. So yes, you pay taxes, but they may pay for many services you receive. So for example, previously mentioned, it would be healthcare, child tax benefits, etc. We have a progressive tax system. So the more money you make, the more you have to pay and contribute to paying in taxes. And thirdly, taxable income matters. So make sure you learn about tax deductions that may be available to help reduce taxable income, and the tax credits that may be able to claim to reduce the amount of tax that you have to pay. And the second section that we have covered, it would be tax return for students. So learn about deductions and credits and try to maximize the benefits. Don't leave your taxes until the last minute, and more than likely you can complete your own taxes with the help of a software or through receiving some help from friends, family, parents. And this is an investment for you to learn, and you can realize that is a great experience to have the knowledge of filing your own taxes. And thirdly, we covered the area of tax strategies. So this would include a tax-free savings account and registered retirement savings plan, and which would benefit you. So it is evident that taxes will likely eat away at returns, and there's many programs and services that may help you with achieving better tax strategies and knowledge. So coming out of this workshop, you should have a better understanding of how to minimize taxes as a student. Second, be aware that there's a lot of efficient government savings programs. And thirdly, how different sources of investment income are taxed. So the next steps we're looking at that you should all consider is that taxes are typically due April 30th. And for all students, they should plan for next year now, learn about deductions and credits you may be eligible for, and keep a running total of these items that you pay for throughout the year. And it can be a great return on investment. To put this out, a tax-free savings account is likely the better option versus a registered retirement savings plan when you're starting to work. And as well, there's a lot of programs and services if you need require help with filing your taxes, as well as my Mohawk website does include an email and a line that could be reached if you have any information or questions on filing your taxes. So I thank you all, and please complete the post-workshop survey. So it is important to ensure that these workshops are providing you with the information you need. And if you complete the pre-survey, you'll be entered into a draw for one of the 2 100 Tim Horton gift cards. And there's also going to be a survey link sent in the chat for those of you who would like to enter. As well, if you have any questions, we'd be happy and pleased to answer anything you would like to ask us. And I thank you all for your time and patience throughout this. Thank you.
Thanks a lot, Miriam. That was great. Really appreciate you going through all that.
Thank you.
Okay, we have a few questions. Do you want me to read them out to you, Miriam, or do you want to take a look at them, or how do you want to?
Up to you.
Okay, so the first question, and I think you basically covered this, but just to go over it again, the tuition fees paid in 2021 generate a refund in 2022, or is it just a tax credit for coming years?
So I think we did touch a little about this, but the tuition fees paid in the year of 2021, you would file this on your income tax. And as mentioned, for students who are paying tuition fees, they can be non-taxable, so you don't have to pay taxes on that. And the CRA outlines more important information regarding paying tuition fees. So if you would like, I think it would be beneficial to check out CRA's website, and you can have more information on how you should file your tuition fees and whether if you're eligible for a tax credit.
Okay, thank you. Yeah, and the links to some of the like the tuition information, some of those things will be included in a resource document that will be sent out through Zoom after this webinar as well. So.
Yeah.
Okay, so the next person has 3 questions. They're all really getting around international taxes. First one is, what does significant residential contribution mean? And I posted something while you were speaking, Miriam, in the chat, as far as how the government determines residential ties for international students. So folks might want to take a look at that, but is there anything else you want to sort of reinforce there? I think you did speak about this as well.
Yeah, I think that a link that Craig has posted in the chat will be beneficial if you'd like to more about residential contribution. And of course, the term can apply to everyone because everyone has different circumstances. So everyone can have a different meaning of what that means to them and how that applies to them.
Yep. And really at a high level, excuse me, at a high level, the government's looking for whether or not you were in Canada for more than 6 months of the year. So that's one of the first sort of initial tests as far as whether or not you're a deemed resident. And if that you do check that box, then you look at whether or not you have any earned income, and that determines whether or not you need to pay any taxes. So the next one is same person, just another part of the question. If an international student arrived in Canada at the end of December but started school in January, does the student need to pay? Does the student need to file taxes this year?
So to answer that, that would depend. So for example, if you arrived at the end of December and if you were working during those weeks of December, that income that you earned during the month of December would continue on to the following year. So you would have to calculate and file the amount you earned in that year. And regarding starting school in January, that would move towards next year, and you would have to file the tuition fees that you paid for the year that you started in.
Yep, great. And the last part of this question, if an international student receives salary for online work for a company outside Canada, is that student required to file income or other taxes?
So I think we've mentioned that on the slides previously, but taxable income is whether that company or work you were working with was located in Canada. So any income that you earned in this country, or else if you've earned income outside of Canada, you would have to probably file your taxes there as well. Canada sometimes does require you to fill out taxes, even if you earned income in taxes. Sometimes the CRA does ask you to file a report on the income that you made.
Yeah, and I'll add a little bit to that. So again, if you're deemed a resident of Canada, based on that link I put out there in the chat and the first part of this question, you would need to file taxes regardless of where the sort of source of the income is. Now, as Miriam mentioned, you'd also be filing taxes in that other country. So, and typically what happens, you have to look at each country individually. You can, when you do file your Canadian taxes, you're able to claim a credit for the amount of taxes you paid in that other country. And you may not owe taxes in Canada, but you still need to file the taxes, just for, you know, to make sure you're eligible for some of the other benefits, and just as a good, you know, discipline to be in, that the CRA is going to look for you to file your taxes if you are a deemed resident and have earned income.
Yeah, perfect.
Okay, next question is, does Mohawk provide help in preparing our tax submission?
So with some research, I did find that my Mohawk College does provide an email and phone line that can be reached at if you have any questions about your filing your taxes, but it's usually geared towards filing tuition forms. And if you have any inquiries, there are many resources outside of college and school that will help you with preparing taxes. So for example, you should look at any local churches. They usually do offer free tax filing around this time, as well as other online platforms. And to mention, there are free softwares that will help you with preparing your taxes and are free of charge, as opposed to going to a professional accountant. And usually there can be a lot of modules and trainings on how to use that software. And overall, I think the best option would be to go out in your community and look at any postings about for free filing taxes, and they would probably help you.
Okay, great. Okay, so next question is, I paid tuition in 2021, but started classes in 2022. Do I report them in 2022 or 2023? So I guess really the question is, when is that tuition tax credit form? How is that defined? What's the year that's defined in?
So I think it is defined on the year that you actually pay your tuition. So if you're having a loan or paying it out of pocket, that date would show on that transaction, and you would file it for the following year. If you're talking with regards to Mohawk College, if you did start classes on 2022, Mohawk College does give you a personalized T4 form for filing your tuition, and this would also indicate what year to file your taxes. So this will be all on My Mohawk, and you'd have to sign in with your student login and ID to access that form, and it should indicate what year for filing that tuition would be for.
Great, thanks, Miriam. Next question. My first paycheck was on December 31st. Do I need to report taxes this year?
So the short answer is, so if your first paycheck was on December 31st, most likely you would have worked in the month of December or previously. So you would have to file and report your taxes this year. That is, as December is still the current year, and you would file it for the following year, so 2022.
Yep, great. Next question. Do I need to do a report for me and other for my husband, or is it all together?
So when it comes to filing your taxes, it is most likely done individually with individual accounts. There are people who have a shared tax accounts, but for most of all, you would have to do a separate file for your husband and for yourself, and each individual has their own account with their own valid social insurance number.
Great, thank you, Miriam. And where do I start? I need the basics. Is it a website or what?
I think what you mean is the basics to filing your taxes. So one of the best websites to check out is the Canadian Revenue Agency's website, as that is the website that provides all the information of what taxes are, when you should file taxes, and it is administered by the government. You probably want to avoid any other third-party websites because it can be about a different state or country, and CRA applies to all Canadians. So I think it is a great way to start about learning about how to file taxes. As well, there's many services, financial services, such as even talking with your bank provider. They do provide some information about filing your taxes and etc.
Great. And again, I'd encourage folks, when you get the resource sheet through when you registered, there is links to a lot of the CRA websites. And I was trying to find it here, but I couldn't find it right away. But there is one that kind of gives you an overview of what all you need to do to be filing your taxes.
Yeah, and to touch on that, Greg, kindly Deb has posted a lot of the links that we're talking about, such as free clinics, so where you can so volunteer income tax programs where you can get your taxes filed for free. There's also a CRA website and my Mohawk website where Mohawk College students can access any information about their financial.
Yep, great. Thank you for pointing that out. So yeah, keep watching the chat, everybody, because there is a lot of great information being put out there. Okay, next question is, if I paid tuition fees in 2021, but only arrived in Canada December 17th, do I file taxes this year?
So I think, yes, you would be required to file taxes as you did pay tuition fees in 2021, and you still arrived in the last month of December, where any income up to the last day of December must be reported on your filing for income taxes.
Yeah, and one little thing to add there, and Miriam had mentioned this earlier. So if you paid tuition in 2021, but if you don't have any earned income, you can carry forward that tuition tax credit to future years when you do have earned income as well. So keep that in mind. It's that combination of having paid tuition, but also you need earned income to get a tax benefit from that tuition tax credit.
Thank you, Greg, for pointing that out. That's very helpful.
I'll take this next one. Will you be sharing the presentation? We do share the recording of this webinar, and that'll be available. I think somebody actually put it on the chat earlier. That'll be available through Mohawk. Can't remember who put that on the chat, but I remember seeing something a few minutes ago.
Yeah, we'll have all the videos posted probably within a 2-week period. I still have to do a couple more, so yeah.
Thanks, Deb.
Okay.
Okay, and last question at this point. Apart from my proof of Canadian bank account and payments to my college, do I need a receipt of my rent or any other similar document as an international student to do my taxes?
So yes, you do need receipts of any expenses such as rent or paying for your car, insurance, etc. And these receipts must be kept in order to file for your taxes as a proof or documentation.
Yeah, and just like as far as the main tax deduction tax credits are the tuition one that Miriam had mentioned. You are able to claim expenses for moving, but just the cost of rent for living is not a tax deductible expense. So you need to look into what things are eligible, and then, as Miriam said, definitely want to make sure you have receipts for those things, and keep those receipts as well, because the CRA may come back at a later time, up to, I think it's 7 years, to ask more questions. So you just need to keep that documentation. Yeah,
and Alexandra has some links posted that will be helpful for many of you guys with regards to the questions you asked. So those links would be helpful to save them for any future questions.
Great. Yeah, thanks, Miriam. Thanks, Alexandra. I think the one you just posted is the one I was thinking about, the get ready to do your taxes one. So thank you for putting that out there. Okay, that looks like all of the questions. Oh, one more. Can you deduct the cost of the gas you paid to move?
Do you have any information about that, Craig?
Yeah. As long as you meet the criteria of moving at least 40 kilometers closer to school, you can deduct the cost of things like gas and I think a couple of nights accommodations, potentially if you had to rent a U-Haul or something like that. So let me try to find, I'll find the link for the moving expenses. It's also going to be in the resource sheet we send out, but the CRA does a good job detailing exactly how all this works and what you can and can't deduct. Okay, if anyone has any more questions, please drop them in. Again, I'll get this moving expenses here. Link out there in a second. Okay, so there's the link for moving expenses. And again, the CRA does a very good job laying out what you can and can't do. And so definitely refer to that. And if you have questions, you can always reach out to them if there's something that's more unique for your own situation. Okay, and I just posted the post survey there again in the link. As Miriam's mentioned a few times, if you complete the pre and post survey, you're entered into a draw to win one of two $100 Tim Hortons gift cards. So please complete those surveys. The feedback is very much appreciated to see what we need to work on to improve the webinars going forward. And Alexandra is posting. Don't forget to register for attendance. So anything, Deb, Alexandra, Lindsay, anything more you wanna add?
I would like to thank everyone for their time and participation throughout this webinar. And as well as always, if you have any questions or inquiries, Mohawk College is available to be reached at, or Momoni is also here to support any students who are having any sort of questions. And overall, we would love to be a hand to anyone out there.
Yeah. And thank you, Miriam. We also, this is one of the first in a series of webinars. So stay tuned to our Instagram and our Facebook page, because we've got some investing workshops coming up, and also career workshops and managing your OSAP loans as well. So this is just the first one, and please stay tuned for more.
Okay, and thank you very much, everyone from Mohawk. Thank you for all the students for attending, and Miriam, great job on the presentation again. So thank you very much for all of your time.
Thank you.
Thanks, Miriam.
Thank you.